Hello everybody, welcome to Sir Chua's Accounting Lessons PH, and today's problem-solving technique comes from cost accounting, the preparation of the statement of cost of goods manufactured and sold. Before anything else, I would like to introduce you to this new series that I will be doing, which is basically problem-solving techniques of anything under the sun that we can talk about in accounting. So I hope that this series will be helpful for you guys to, achieve and attain competency in solving problems in accounting. So for our very first problem-solving technique lesson, we will be reconstructing a statement of cost of goods manufactured and sold, which is usually asked in cost accounting. Okay, so we have here the accounts that are related to a manufacturing concern, and I'll teach you how to decipher things inside these T accounts even though the problem doesn't tell you anything or any detail about it. Okay, so we'll be deciphering, we'll be looking into detail on each of these T accounts one by one, and what is the relationship, why some amounts are debited and then why some amounts are actually credited. Okay, let's start first with your raw materials inventory. For raw materials inventory, usually the debits will tell you all of the purchases of your raw materials. Okay, and then the credits are usually the ones that you issue to production. Now, as you can see, so let's first look at the amounts. 175,000 here might be a purchase because it's a big amount and it's in the debit side. But as you can see here, we also have 1,750. That 1,750 can also be a purchase, but we can also look onto the other T accounts to know if that is really a purchase or not. However, as you can see, we have here a credit in the work in process inventory with the same amount of 1,750. Now, credits in the work in process inventory account actually means that it is something that went out of the production process. So it's either it went out because it's already finished, or in this sense, the relationship is it's a credit in your work in process inventory, but it was debited to your raw materials inventory, which means that this is excess materials from the production process itself that was brought back to the stock room of your raw materials. So this 1,750 is not a purchase. This is excess materials from the production going back to your raw materials in the stock room. Okay, now let's look on the credits of your raw materials. For the credits of your raw materials, we have 3,500 here and we also have 56,000. Now, that 3,500 doesn't actually have anything in our T accounts here. So, what this 3,500 might mean. Now, this is actually credited without any regard on these. And if it's credited, so this is actually, or this might be a return of your raw materials from your supplier. Okay, so since it doesn't have any connection with all of our other T accounts, then this 3,500 is actually a return of your maybe malfunctioned or maybe basically, or maybe excess that you want to give back to your supplier. Okay, so that's credited to your raw materials inventory. And then let's now talk about this 56,000. Now this 56,000 here as credited, when you credit raw materials inventory, although it might mean that you return something to your supplier, this 56,000 can also mean, and usually most of the time, that is the materials that you actually issued to production. How can you confirm that 56,000? As you can see, it is a credit to raw materials inventory because you brought it to production. Okay, you issued it to production. So this is your materials in your work in process inventory. So it was issued for production, for the production process. Okay, so we have already understood your raw materials inventory. For your work in process inventory, basically all of the debits here are for the direct materials, direct labor, overhead, but how can we know what are materials, what are labor, what are overhead here? Okay. So we have a beginning balance of 89,000 in the first place. Now, this 56,000 we already know this is materials. Let's now go to 225,400. Okay. Now, that might be labor, so let's try. As you can see, your factory salaries is 322,000. Okay? But it's not completely, if this is the total factory salaries, always remember that your factory salaries might include both of your direct labor and indirect labor. However, your indirect labor will be passed on to overhead. So let's try. If your factory salaries is 322,000, let's try deducting 225,400. Let's see what you will get. So 322,000 minus 225,400, we have here 96,600. Now, let's look for that amount. 225,400 is this one, so this is your direct labor that was charged to the production process, and then your 96,600 is actually your indirect labor, part of your overhead. Okay, so remember, the amount in your factory salaries account is both of your direct labor and indirect labor, and you can reconstruct them even if there is no detail that was given to you in the problem. Okay, next, this 199,600, so maybe this is overhead. Look at the T account for overhead. If you look at the T account for overhead, it says here that you also you have a credit here of 199,600. Remember, in cost accounting, that debits to your manufacturing overhead is your actual overhead, and credit to your manufacturing overhead account is your applied overhead. Now, as you can see, the actual amount of overhead is the one that you applied to the production process. So this is your overhead, and we can say that this is actual costing system because there is no overhead variance. The actual amount of overhead is the one that you applied to production. Okay? So, we're done with this three. Now, we already know what this is. This is the excess materials that you brought back to your raw material stock room. Now, if you credit something in the work in process inventory that is not an excess materials that was brought back to the stock room, then this is your completed during the month. So you have already completed 328,625. How can you confirm that this amount of 328,625 is the amount that was already completed for this production cycle? As you can see, it was also debited to your finished goods inventory. So you can confirm that this 328,625 is already completed during this certain cycle. Okay. Now that we're done with your work in process inventory, let's now talk about your finished goods inventory. Debits in your finished goods inventory includes all of the amounts from the production process that was already completed during that time. So as you can see here, we have already completed 328,625. Now, credits to your finished goods inventory is the amount of the cost of the inventory that was already sold. So, coming from the stock room of finished goods inventory, it was released from the finished goods inventory stock room 324.50. You have already sold it to your customers. This is the amount that you will see in your cost of goods sold account, 320,450. Okay, so we're also done analyzing this earlier. And then for the other amounts in your overhead, these are just the overhead amounts that you have incurred. So if there's no other detail that was given to you in the problem, then these are just all other actual overhead that was recorded during the production process. And then this is your cost of goods sold. Now that we have already understood these things, let's try to reconstruct the statement of cost of goods manufactured and sold. Let's say this is Minzy Company. Okay, don't forget the heading, the name of the company, and then statement of cost of goods manufactured and sold for the month ended, whatever month it has ended, or whatever production cycle has already ended. Okay, we start with the beginning balance of your raw materials. So raw materials at the beginning of the month, which is July 1, it's given here in your T account, which is 21,000. So I will put here 21,000. Okay. Then we will be adding all of your net purchases. So add net material purchases. Now, as you can see, our purchases is how much? 175,000, but we have returned 3,500 to our suppliers. So we will just be getting your net purchases. 175,000 minus 3,500 is 171,500. So I'll put here 171,500. Get the total of the two of these amounts, and you will get raw materials available for use, because these are the materials that you have at the beginning of the period, and you have also purchased 171,500. So this means that these are all the materials that you can use during this period. Okay, so 21,000 plus 171,500 gives you 192,500. If these are all the materials that you have, let's try deducting now the amount of materials that was left in the stock room at the end of the production cycle. So we deduct raw materials at the end of the period, which is 138,250. So if we can use 192,500, and what is left in the stock room after the whole production process is 138,250, then the materials that we have used is 54,250. Okay, so these are your direct materials used. Let's confirm if this is correct. How much is the debit in the work in process inventory for materials? 56,000. However, remember that you have 1,750 that is excess materials that was brought back from the inventory going back to your raw material stock room, which is 1,750. So 56,000 minus 1,750 gives you 54,250. And this is your direct materials. Okay? Then we put here your direct labor, which is 225,400. And your manufacturing overhead. Your manufacturing overhead is 199,600. As you know, these three are siblings to get your total manufacturing cost. So I put here total manufacturing cost. So 54,250 plus 225,400 plus 199,600 gives you 479,250. Again, that's 54,250 plus 225,400 plus 199,600. So 479,250. That is your total manufacturing cost for the month of July. Okay? So in any case that your problem asks you your manufacturing cost, then you just add all of the three siblings, which is materials, labor, and overhead. Now, what if the problem asks you about prime cost? Then your prime cost is your materials plus labor. 54,250 plus 225, 400, that is 279,650. What if the problem asks you conversion cost? That is labor and overhead. So 225, 400 plus 199,600, 425,000. Prime cost plus conversion cost equals total manufacturing cost. That is false. Okay? That is wrong. Again, when your problem, or let's say true or false question, asks you prime cost plus conversion cost equals total manufacturing cost, that is false. Why? If you add together your prime cost and your conversion cost, you will double your labor amount. You are computing your labor amount twice if you do that. Okay? So your total manufacturing cost is either prime cost plus overhead or conversion cost plus materials, but it is never prime cost plus conversion cost, because you will double your labor amount. Okay, let's continue with your statement of cost of goods manufactured and sold. Now we add now the beginning balance of your work in process inventory. So you add work in process inventory at the beginning of your month, which is 89,000. We call this the total cost of work that is in process, because this is in process. 479,250, you're doing that during the month, and then at the beginning of the month you're also trying to finish 89,000, because that's the beginning balance of your work in process inventory at the start of July that is not yet finished during that time at the beginning of the month. Okay, so we add them together. 479,250 plus 89,000, that is 568,250. Okay, and then we deduct your work in process inventory at the end of the month. So at the end of the month, what is left that is not yet finished in the production process is 239,625. So we deduct that to 39,625. Okay. The difference between the two is basically completed goods. Cost of goods completed during the month, or what we call as your cost of goods manufactured. For your cost of goods manufactured, 568,250 minus 239,625. 328,625. How will you know if this is correct? This should be the amount that was finished during the period. 328,625, you can see it here, 328,625, and you can also see it here, 328,625, the amount that was finished during the period. The amount of work in process inventory, basically the whole process itself, that was finished during the period is 328,625. Then we add now your finished goods inventory beginning. Okay, so at the beginning of the month, you have 189,000 finished goods. We add them together. If these are completed goods and you also have this in your stock room, so basically this is everything that you can sell, right? So this is cost of goods available for sale. So we add them together. 328,625 plus 189,000. This is 517,625. All of the cost of goods that you can sell, available for sale, 517,625. Then we deduct the ending balance of your finished goods inventory. Which is 197,175. This is 320,450. Now, this 320,450 is basically your cost of goods sold. Cost of goods sold is 320,450. Cost of goods sold in your T accounts, 320,450. Okay? So this is how you prepare your statement of cost of goods manufactured and sold. Okay? Now, the secret in answering problems in cost accounting relating to the statement of cost of goods manufactured and sold is basically knowing the whole statement by heart. What happens when you add the beginning balance of your work in process? What happens when you deduct the ending balance of your finished goods? Basically, when you are being asked about total manufacturing cost, when you're being asked about cost of goods manufactured, or let's say the total itself or the end point itself, which is cost of goods sold, then your best friend actually is the whole statement itself. I don't want you to memorize it just because for the sake that you know it by, as a formula, but rather it's better if you understand why are we adding things, why are we subtracting things. Okay? So that is our problem solving technique for this session. Thank you very much and have a great day.